What do you think here? Has it gotten low enough now that it is attractive to investors?
There is no floor on this stock. Does it go all the way back down to 29? I actually, over the next couple of years, wouldn't be surprised. But
Do you agree that Tesla and its stock are poised for greatness? Through the years, and in recent months especially, Tesla lost some investors but gained some bulls. The past year in particular had been a rough time for Tesla investors, which pushed them to sell their shares. Today, many believe that Tesla and its stock are poised to achieve success. A few days ago, Moody's Investor Service became the second credit ratings firm to endow Tesla with investment-grade status, upgrading the company's credit score by one notch to Baa3, following a similar move by S&P Global Ratings in October. Let's talk
Tesla's
about
credit rating was Ba1 or junk status, according to Moody's Investor Services at the end of January. But yesterday evening, the credit rating provider upgraded the EV maker to Baa3.
Let's talk about this detail, shall we? Much to people's, at least Tesla stockholders and enthusiasts' delight, Tesla scored a Baa3 rating from Moody's Investor Services for a stable outlook. Moody's withdrew Tesla's former Ba1 corporate family rating, the Ba1 PD probability of default rating, and its SGL1 speculative grade liquidity rating. The rating action reflects Moody's expectation that Tesla will remain one of the foremost manufacturers of battery electric vehicles, with an expanding global presence and very high profitability. The upgrade also incorporates governance considerations, including Tesla's prudent financial policy and management's operational track record, noted Moody's. What does Tesla's Baa3 rating mean? With Moody's Baa3 rating, Tesla enters investment-grade rankings. For context, Moody's rankings are split into long-term and short-term categories. A Baa3 rating belongs in the long-term category for investment-grade issuers. Further, a Baa3 rating falls under Prime 3 P3 in the short-term rankings. Short-term ratings determine a company's capacity to repay short-term obligations. A P3 rating means Moody believes Tesla has an acceptable ability to repay short-term obligations. On the other hand, long-term ratings refer to the relative credit risk a company takes related to fixed-income obligations with an original maturity of 1 year or more. That said, Tesla's BAA rating means Moody's believes the company is subject to moderate credit risks. Companies with BAA ratings are considered medium-grade that might possess speculative characteristics. Note that numerical modifiers 1 through 3 are added to long-term ratings. Tesla's modifier 3 is at the lower end of the generics rating category, while the modifier 1 is at the higher end. Tesla will maintain its position as one of the leading manufacturers of battery electric vehicles, as the company further solidifies its global footprint. Renee Lipsch, senior credit officer at Moody's, wrote in the statement. The credit grader also cited the automaker's expanding product offering, including early production of the Cybertruck slated for later this year, its regional production facilities, and heightened focus on the efficiency and financial leverage that's well below 1 time after Tesla repaid about $10 billion of debt in the last 3 years. Moody's uplift has both symbolic and practical value. Companies that rise from junk to investment grade typically benefit from cheaper financing by attracting a deeper pool of investors. In addition, a high-grade credential from at least 2 agencies is enough to be formally considered a blue-chip credit among rating-sensitive investors.
Right, so Tesla basically entering the blue-chip world now, right, following this Moody's upgrade to, like you said, Baa3, I believe. This, this is important because when 2 ratings agencies give you that investment-grade status, you get that blue-chip status, means cheaper to issue debt. You can issue it more cheaply, more access to capital, and that means...
It's a historic event for Tesla, said Joel Levington, a Bloomberg intelligence credit analyst. We continue to believe the rating upgrade cycle for the company has legs, potentially narrowing views of credit risk against Volkswagen. Simply put, Tesla exiting the junk-rated world after Moody's upgrade bids well for the company. Still, Tesla could never be complacent as competition in the EV industry is getting stiffer. In light of that, Reuters reported that Toyota is said to be working on a complete restart of its electric car strategy to compete in the market with the likes of Tesla. In order to achieve carbon neutrality, Toyota's own technology, as well as the work we are doing with a range of partners and suppliers, is essential, the company told Reuters last year, but declined to offer specifics. At the time, Toyota is said to be considering a reboot of its electric car strategy to better compete in a booming market it has been slow to enter and has halted some work on existing EV projects. This is according to 4 people with knowledge of the still developing plans. The proposals under review, if adopted, would amount to a dramatic shift for Toyota and rewrite the $38 billion EV rollout plan the Japanese automaker announced in 2021 to better compete with the likes of Tesla. According to the aforementioned individuals from the Japanese company, a working group within Toyota has been charged with outlining plans by early this year for improvements to its existing EV platform or for a new architecture. Notably, Toyota has suspended work on some of the 30 EV projects previously announced, which according to the sources and a document reviewed by Reuters include the Toyota Compact Cruiser crossover and the battery electric Crown. In February, Toyota's next CEO, Koji Sato, with an eye on Tesla, plots a next-gen EV platform push. Grudging admiration for Tesla helps reinforce a stark realization at Toyota. For all its expertise in electrification going back to the first Prius hybrid, Toyota needs a great leap forward for the new era of full electrics. Sato, 53, said he's prioritizing a 3-pronged strategy after he succeeded Aikyo Toyoda, 66, as CEO on April 1st. The approach includes ramping up the car maker's EV strategy. Notably, in January, news of Toyota investing $35 billion into EVs made rounds, but some say it may be too late. Toyota, one of the world's largest automakers, is battling criticism that it is not moving fast enough to reduce carbon emissions. Some even say it's opposing climate mitigation efforts. However, the automaker says it does believe in an all-electric future. It just maintains that the future will not reach all of Toyota's markets at the same time. Toyota was once considered a green vehicle pioneer, as it introduced the Prius, the world's mainstream hybrid vehicle, in 1997. The Prius combined a gasoline-burning engine with an electric motor and a small battery. This allowed drivers to dramatically increase their fuel economy compared to traditional internal combustion engine-powered cars. The new technology proved to be a sales sensation. Toyota had offered hybrid versions of much of the rest of its lineup. The automaker has sold a total of 20 million hybrid cars, trucks, and SUVs around the world, and 5.4 million in the US alone. But in the meantime, other automakers, spurred by ever stricter government regulation and the success of newcomers like Tesla, began investing in fully electric vehicles. For a long time, Toyota's leaders argued there are fundamental engineering challenges to battery-powered electric vehicles. They take a long time to charge, require heavy and expensive batteries, and still have limited range. Those criticisms are less valid now given the recent improvements in battery technology, auto industry analysts say. More importantly, companies have found a strong business case for EVs. Tesla is now the leading luxury brand in the United States. Toyota's new $35 billion investment, announced in December 2021, includes a plan to introduce 30 electric models by 2030. That is just under a quarter of the more than 130 models it currently makes. At the time, however, Toyota said it would invest an equal amount in hybrids and hydrogen fuel cell vehicles. Gartner, an industry research firm, expects gasoline-burning engines will still make up about 50% of sales in the early 2030s. We still think that in 10 years, 50% of new vehicle sales will be gasoline, said Mike Ramsey, a vice president in Gartner's CIO research group. And if you look at the global footprint, that is almost certainly going to be true, because you're not going to see in Nigeria, in Iran, in Indonesia, a 50% market share for electric vehicles, period. For now, this remains to be seen. Regardless of this conclusion, however, Tesla continues to lead the US EV market, eclipsing the next 15 brands combined. Notably, Tesla shares grew by almost 52% year-over-year during Q3 2022 despite macroeconomic headwinds, according to Counterpoint Global Passenger Vehicle Model Sales Tracker. Battery EVs, BEVs, constituted over 80% of the total US EV sales. BEV sales grew by more than 78% year-over-year during Q3. Tesla's Q3 sales eclipsed the next 15 brands combined. Commenting on market dynamics, Associate Director Hanish Bhatia said, overall U.S. passenger vehicle sales will likely suffer due to macroeconomic pressures until at least mid-2023. Higher interest rates are hitting both loan and leasing routes to ownership. However, the affordability of EVs will be revitalized once EV policies and credit subsidies take effect. In light of this, Tesla sales in the U.S. grew by more than 56% year-over-year during the quarter. Although Tesla has had some headwinds in meeting orders and delivering vehicles, it has remained the undisputed market leader for at least the previous 19 quarters. The Model Y and Model 3 are their most sold models. For now, the question is this: can Tesla maintain its lead in the global race to the electric car? As some experts say, the great electric car race is just beginning. Subscribe for more Tesla stock updates.